So guys, the other day I took this trade entry from here. I took from this order block, this fair value gap with the order block, but because of the spread, it gave me the entry around this area, and I targeted all the way to this 4 hours fair value gap, and that was the 4 hours buy side liquidity. As you can see, like I have marked it here. I usually risk 1% of my account, okay, 1% per trade, and I initially target my risk to reward ratio is 1:3. Like I go for that mostly. Sometimes, depending on the situation, I adjust it to like 1:2.75. With that, keeping that in mind, I entered into this trade from here. I saw the huge possibility. Also, there are some other factors on this specific part. I can remember pretty easily, like the midnight opening was something around this area and price was trading way below that. Also, because this is US dollar and Japanese yen, so USD JPY, I saw like US dollar wants to go high on the DXY chart from a weekly fair value, hourly fair value. So on the hourly fair value gap, it's reacting beautifully and then going up. Also, the weekly fair value gap is there. So I had lot of bias regarding this. Also, as you can see, like for a long period of time, it's on a uptrend. It's just doing some retracement to fill up some of the fair value gaps and so on. So anyway, a lot of things was there during the moment. I'm not gonna go over everything in this video because this is just a short recap of what I did. So yeah, DXY was showing some bullish indication. On the other hand, JPY, USD JPY was showing some bullish indication, like according to my analysis on 4 hours time frame. So I entered around this area, right? Entered this area uh, on this candle, okay, this move. And why I did that is because there is this 4 hours order block with 4 hours fair value gap. Anyway, so let's get back to where I was. Will hide all my drawing. So what happening here is, this is the fair value gap that price came and reacted and went up. I saw that move. Also, price failed to take this liquidity. So what happened here is, price took this liquidity, closed above, price came up to this point, closed here. Now next liquidity was this one, price came up, closed above. So the next one will be this one, price give a huge move, closed above, of course, and then this is the next liquidity level which price took, but price failed to close below, right? Close above. So what is the next liquidity? This low. This low is the next liquidity. Next 4 hour gave a inside candle, which is like not taking this liquidity or not taking this liquidity inside. So my bias is still for this low, which price did here, and the next candle, since price failed to close below that candle, right, below that low, usually this is the liquidity target that price should target. But what happened is price came down, closed below, so this is the next liquidity target. So I was at this moment when I know like price should go for this liquidity, if not at least for the previous. Like I'm not looking too far back for the moment. So what I looked at here is, there is this fair value gap that price is reacting. Also, it's a huge upside move, as you can see. Now price came up to this low, or on exactly on the fair value gap, reacted, went up. On a smaller time frame, there is hourly fair value as well, and that one worked even better. So the next candle's target I thought will be this high, okay, this high, because that's the way price should work. So what happened is, price opened here, and this is where I was looking at the chart and looking at the price action. So as you can see, this is my 4 hours order block sitting right behind that, and the fair value gap, okay. So price came to that level, reacted. So when I saw that, I dropped to the 15 minutes time frame, looked for some good market structures over here, like taking liquidities from the previous low. Also, it took liquidity from this low. and inside of this higher time frame fair value, I wanted to see prices reacting and respecting this fair value gap. Okay. Also there is this order block as well. As you can see, like there is this order block. From the order block level, price actually reacted and respected beautifully here. Okay. So when I saw that, I dropped down to 1 minute time frame. My bias was, like upside, as I said earlier. So on the 1 minute time frame, I was looking for a liquidity grab of recent lows. It took the liquidity from this low as well, this swing low, but I was looking for this specific area. I want to see liquidity being grabbed, but no body, no candle was closed below this line. Okay. And as you can see here, and even the next level, no candle was closed below the low. Okay, previous relative equal lows, no candle was closed here. So this is a beautiful liquidity grab inside of a higher time frame point of interest. Okay, higher time frame point of interest, beautiful liquidity grab. So what I waited for after seeing this liquidity grab is a beautiful market structure shift with displacement, which happened right here, as you can see. Also for the market structure shift, a lot of people thinks about the wick of the candle if it passes above, but I don't consider that, because if I considered wick as a market structure shift, this, how can I be so sure that this is a liquidity grab and not a market structure shift, right? So you need to have some set rules for that. So for me, that's my rule. Like I want to see a candle's body closing above that market structure, like previous swing high or high, whatever you call it. So market structure shift with huge impulsive move and displacement, of course. So what I did here is, when I saw this happened and market is coming back, I waited for the price to come at around this 0.62 level. This is where I entered, but because of the spread, I got entry over here, and that's why I marked it over here. Anyway, so a stop loss at 1. I think I didn't put exactly on that point. I just put little bit below this. Let me see if I'm not wrong. This was the entry, and until this level. Okay, yeah, so what I did here is, until this level, as you can see, it came like 67 ticks, which is like I always try to round it up to the closest 5. Okay, so if I reduce it to 65, it gonna go inside of that swing low. That's why I didn't reduce it, I actually increased it to 70. So that's like 7 pips stop loss. And the target, I don't set here. I usually, like as I said, my 4 hours liquidity was up here, and as you can see, I had it marked, and that's how much I targeted and how far I targeted. So my entire move was looking something like this. Okay, it's a huge target, of course, I know, like it's like 8.79, or maybe I took around 8.77. If you risked $100, that $877. However, like as I said, I usually invest 1% of my account, but for this specific trade, I don't know why I didn't take the full lot that my 1% allows me. So my original lot was something like 4.79, if I can remember correctly, but I took like exactly 3 lots instead of 4.79. Okay, so that gave me around like 0.70% instead of 1% of risk. This is where I just cheated a little bit, and as a result, I didn't make the full profit that I could have made with my original plan, which was 1% risk and whatever the liquidity target is, but minimum 1:3 year. That's what I usually target. Now, when price came below below that fair value gap, I'm not gonna say like I was not little confused that if I'm too early in the move or not, because the C of the fair value gap, or the consequent enclosement, which is like 50% of the fair value gap, was sitting right below this low. Okay, and maybe price wants to come below this low and grab the liquidity and then give the move. But anyway, I was certain that price eventually gonna go up. So yeah, I let it play. Price came like halfway down to my stop loss level for once, and after that it went up. So this entire pullback on 15 minutes, it looks like this. Okay, so price came into this fair value gap. Okay, price came into this fair value gap and now reacting. Okay, also there is this inversion fair value IFVG, so price came exactly on that IFVG inversion fair value, mean threshold of that IFVG. So what happened is every time price is making a retracement, I was trying to figure out which levels are major that price can come and retrace, and I'm trying to like figure out that if I'm right on my analysis or not. So as you can see, for this specific area, I was mostly looking at this IFVG. Okay, so IFVG, price came inside of that IFVG. Okay, got rejected, came again on that breaker blocks high, got rejected, and eventually went up. And then again there is this unfilled IFVG that I wrote here, like I want to see it should work as support, because when price was going up, this part specifically worked as resistance for once, then went up. So I wanted to see that it works as a support for once as well. So what happened here, price went above that. Okay, came down to that inversion fair value gap, that unfilled area of the inversion fair value, because the original fair value is until this level. Okay, so if I mark it until this level, you can see like let me put a mark. So you can see it worked as resistance once, twice, thrice, and then fourth time, fifth time. Okay, it worked as resistance for like 5-6 minutes non-stop. Okay, so that's why I said like I want to see this working as a support, because it worked as a resistance and finally it broke through that resistance. Now I want to see it is working as a support. Okay, and that exactly what happened. Price came on that, because the low was working as a resistance. Let me put the mark one more time, and as you can see, that low IFVG low, that was working as a resistance for a long time. So the high, this one also, like, oh sorry, I might have selected the wrong one. Yeah, so the high, I want to see like IFVG high. I want to see this working as a support as well. So it worked as a support, went up, next candle went impulsively up. So now this is going to be my order block that price came to and respected beautifully. Like it came up to, I think, the mean threshold, I mean the 50% level. It was respecting the 50% level overall, because came below that, went up, came below that, went up, came below that, went up, and then that 25% level, just look how precise that is, the line. So yeah, I mean this is the order block, so I know like price is not going to come below this, so I moved my stop loss right below this order block. I could move it like after this rejection, I could have moved it around 50% level, but that's riskier approach, because if price came back to retest that 50% one more time, I might have got stopped out and missed out on a huge move towards the upside. This is not the move end, right? This is where the move ended. So if I moved the stop loss little bit above, so that's why like I tried to keep it safe. So I put it, I think instead of this low, I put it right below this unfilled fair value, inversion fair value, and then let it play for another while. And when this move happened, I was my brain was working good enough to go back and see exactly where price can come back to. So on the 15 minutes, this is the pullback looks like. It's nothing comparing to the the move up, right? Because the green candles, huge candles, and these three candles failed to even go to this opening price level. It's all three candles. So at this moment, I was pretty certain that price gonna respect that level. So that's the 15 minutes IFVG, and that's the 15 minutes IFVG C, like consequent enclosement or 50% level. So when I saw like my stop loss is somewhat around like this area, I didn't move it up or I didn't move it down either. Okay, so I was pretty certain that this small fair value and this IFVG that aligns more or less like with that is the place price gonna respect. So yeah, I mean price came here. I draw a lot of things over here just to make sure like which is the best level. Mark the order block, price came into the order block. This is the order block's mean threshold, and as you can see, this is the last down close candle before this upside move. So that's why I focused on this one and marked this as my order block, and this is the mean threshold. It's like from the low to the high, the 50% level, and see like price, when I saw price is respecting that mean threshold. Also there is this 50% level of the 15 minutes inversion fair value gap, and price somewhat like respecting that. If I go to 15 minutes, you will see like it's respecting this area beautifully, because you know like this is a long week over there anyway. So what happened is price respected this, went above that order block, again came back to the order block, but respected that part as well, also the inversion fair value I can say, and then it started moving up. So then when price is making a new market structure shift, I'm marking it just for my own, you know, like own journaling thing, or knowing that this is actually a breaker block area that price may come back to. And as you can see, like I marked the breaker block here, but that's actually 50% level of this breaker block, because this is a swing high. So that's the breaker block. Okay, this is the breaker block. So price could have come to this level, but it's okay. Like the 50% level was respected beautifully. Again, price started moving up. What price did is price went, I don't know how that one got moved from there. Price went exactly on this area. Okay, it's a little bit far from that green line. Okay, that green line is my 4 hours liquidity level. Remember that green line. It went there, came back again, but when I saw that there is a higher time frame, like 15 minutes order block sitting right here, the mean threshold, and price is like reacting on that order block on 15 minutes, I actually exited on this high. Okay, so when price was crossing this high, I exited here. I didn't take this little bit of the profit. So yeah, price came up again, didn't go take that liquidity, came down, came up, took the liquidity and tapped into that 4 hours fair value gap. And what price did right after tapping that area? Okay, just look at this fall. Just look, it came again to that 4 hours fair value and order block. That's it for today. I hope I was able to give you guys some idea, but if not, I'm sorry about that. I just wanted to share my trade. And if you want to know like if this is actually something that I took or not, let me find out my screenshot of my account. This is where I entered. As you can see the arrow, and it went all the way up. Okay, so I actually took my exit here, not on this candle but the previous side. Yeah, anyway, so that's where I took the exit. Price went just this much up, and then eventually it crashed all the way back. So yeah, I mean, that's my entry that I wanted to share with you guys. That's it. Thank you. Bye bye.